Hello everyone, welcome back to Mindful Investing. Today I'll be sharing my top 7 dividend stocks for 2025, including some trading at their 52-week lows. These are incredible opportunities for dividend income and long-term growth. I currently hold all the stocks I'll be showing you today, and I'll show you with full transparency in my Robinhood portfolio. I'll also show you the key support levels for each stock using my ThinkorSwim platform on both the daily and weekly charts to help you time your entries. Stick around until the end for two bonus growth ETFs that I'm building for future gains. I currently have a portfolio of $176,000 and I made several videos and shorts on my full portfolio, so do check it out in the channel and follow my investing journey. So let's dive into my top 7 dividend stocks for 2025, starting with LTC Properties. This is a monthly dividend REIT focusing on senior housing and healthcare. It's currently trading around $33 per share, nearing its 52-week low, which is at $30. I currently own 70 shares of LTC, which gives me an annual dividend yield of $159 because of its high dividend yield of 6.81%. Now, let's look at their support levels. On the daily chart, we have a support at $33. That's where we bought 20 additional stocks on Friday, and it did bounce back from this level. But if it does drop below this $33, I'll be buying more shares at 31.3 and 30.3. And on the weekly chart, strong long-term support at 30.3. So if you are interested in this monthly dividend company, this is a great addition to your portfolio. And the second one in our list is Realty Income. It's known for its monthly dividend similar to LTC. It's currently trading around $52 per share, offering a yield of 6%. And I currently own 50 shares with an average price of $54.79. So with this 6% dividend yield, I'll be earning $158 in annual dividends. Now, let's check out its support levels. Back to ThinkorSwim platform, and on the daily chart I see $51.11 as a strong support level, and on the weekly chart we have $47.68 as a critical support level. And the next one in our list is Coca-Cola. This is a reliable defensive stock, currently trading around $61 per share with a dividend yield of 3.18%. And I currently own 50 shares with an average cost of $62.90. And let's check its support levels. Back to ThinkorSwim, and let's go into the daily chart. I see on the daily chart I see $58.90 and $57.90 as the strong support levels. This is for the 1 year daily chart, and on the weekly chart, it's about to touch its 200-day moving average, and I see $59 and $58 as the closest support levels. And if it does drop below its 200-day moving average, we may see $54 and $52.40, which I think is highly unlikely. And the fourth one in our list is SCHD, which is a Schwab US Dividend Equity ETF. And this ETF provides an excellent diversification to my portfolio as it tracks the top 100 US dividend paying stocks. It's currently trading at $27 per share with a dividend yield of close to 3.5%. I own 158 shares, which gives me about $157 annually. Now let's check its support levels. Back to ThinkorSwim, pulling up the daily chart. On the daily chart, it just dropped below its 200-day moving average, and the key levels to watch here are 26.2 and 25.5. I'll be buying heavily on these levels. And on the weekly chart, it's bouncing off its 50-day EMA, and I'm expecting a bounce from this level. If not, watch for these levels: 26.2, 25.5, and if it does go below the 200-day moving average, we might see 23.2 and 22.1. But if it really goes below 200-day moving average, I'll be buying heavily, making my total position to 1,000 shares. That's my goal. And let's move on to the next stock in our list, which is Johnson & Johnson, a healthcare giant currently trading near its 52-week low. Current price is $142 with a dividend yield of 3.46%. I recently started my position with 10 shares and I will continue to buy if it drops. Going back to ThinkorSwim for the support levels. Let's check the daily chart. There are no support levels on the daily chart as it's already trading at its 52-week low. Let's check the weekly chart. On the weekly chart, we have a major support levels at $133 and $118. And the sixth stock in our list is Hershey's. This is a mix of growth and dividend stock, currently priced at $158, offering consistent dividend growth, and I own 6 shares with an average cost of $169, and I'm already down 6%, but I'll consider buying more on the dips. Just to get my average cost down. And now let's check its support levels. Similar to Johnson & Johnson, there are no support levels on the daily chart as it's already trading at its 52-week low. And on the weekly chart, it's well below its 50-day and 200-day moving averages. And the next major levels I see are $152, $125, and $117. And the last one in our list is Target. It's a retail giant with a 3.1% dividend yield, currently trading around $142. It actually bounced back after a bad 2024 Q4 earnings, which hit its 52-week low at $120. Now let's go back to ThinkorSwim platform. On the daily chart, as I mentioned, it recently bounced back from its 52-week low, which was at $120. And on the weekly chart, I see a strong long-term support at $105. Now, let's talk about my 2 bonus growth ETFs that I believe are must-have for long-term investors. So the first one in the list is SCHG, which is the Schwab US Large Cap Growth ETF. This ETF holds 229 of the biggest US growth stocks, including Apple, Nvidia, and Microsoft, currently trading around $28 per share, and I own 61 shares with an average cost of $26.90. Let's look at their daily chart. Back to ThinkorSwim. Let's pull up the daily chart, SCHG. All right, so it's around its 50-day EMA on the daily chart, but the next support levels I see are 26.4, 25.5, which is where I would like to buy more, as it will be bouncing off its 200-day EMA, and if it falls below 25, 24, and 22.3 would be the major support levels. And on the weekly chart, watch for $24, $22, and $19.80. To get to these levels, S&P has to fall by 1,000 points, which only happens when there's a major event like COVID. And the second one in our growth stocks is JEPQ, which is the JPMorgan Nasdaq Equity Premium Income ETF. This is a tech-focused ETF that combines growth with monthly income from covered calls, currently priced around $56 per share, and also provides a great dividend yield of 9.7%. I do not own this ETF currently, but I'll be looking at their support levels to start my position. And now let's check their support levels in ThinkorSwim. All right, on the daily chart, we have a strong support at $54, which will be its 200-day EMA. And if it drops below that, we might see $51 and $50. And on the weekly chart, I'll be buying on its 200-day moving average, which is sitting around $50. And finally, here's my dividend income tracker with my current holdings. I'll be making close to $671 in annual income. I'll be focusing on building these positions over time to achieve financial freedom through passive income. With some of these stocks already trading at their 52-week lows, it's a perfect time to add to these quality names and prepare for long term. If you want to see my full portfolio, check out the video linked in the description below. Also follow me for more updates on my investing journey, and let's build wealth together. If you enjoyed this video, don't forget to like, comment and subscribe. Thanks for watching.